This
5 minutes
conference will now be recorded.
to log into another system, or else if you want to continue with this one, just you continue. Let us take it up later. It's your
So
choice.
that environment is not ready with me. So then I will go with another new topic today. If you have doubts, I will discuss with you about the doubts. Then if you want on Monday collectively that entire doubts, then we'll see on Monday itself. Okay, let me start with a new topic, one new topic.
Yeah.
Okay, fine. So fine, one more new topic we are going to discuss about budgeting. This is another module you are going to learn. One is budgeting. There are major three topics you need to understand. One is fixed assets. Second one is budgeting. Okay, one more, consolidation.
Satya, intercompany Satya.
Consolidation. In this consolidation, intercompany will come into the picture. In consolidation, it will be intercompany and elimination. Intercompany and elimination. So in this intercompany means intercompany financials will be there, intercompany stock transfer will be there. Intercompany stock transfer will not be covered in this. Intercompany financials will be covered. These are the three topics, major topics. Of course, small topics is there. So these are the major topics. It need to be covered. Okay. The first one will come to fixed assets. Now your participation is required. What is the difference between current asset versus fixed asset?
The current asset is, the current asset is the asset which can be liquidated very quickly, or which can be converted into cash cycle immediately. And the second thing is, the current asset is the one which will be used in running the business of the operations of the business. When you look at the fixed assets are used in the business in order to create the benefit for the business in a long run. That means to say, the fixed asset is used to create the products in a case of product company to do the business by the company. And the current asset, one more aspect is, the current asset will always be converted into the cash cycle usually within a year. And when you look at the fixed assets, that will be standing, or that will be continuing with the company for a quite long period of time.
So one by one, we'll write down one by one. Liquidate quickly. Run. It will be used for running your business.
Yes.
Used for running your business. Okay. Another one is what exactly next step?
The next one is
used older than 1 year. It comes as a fixed asset.
Duration.
If it is used in more than 1 year, it is a fixed asset.
Yes.
Usually.
Okay. Okay. Anything else? Now, I have deposited 10 lakh rupees as a fixed deposit. As a fixed deposit, 10 lakhs rupees. Now tell me, is it a current asset or fixed asset?
The 10 year older than a year, it may be fixed asset.
We see another classification of the asset is like short term assets and the long term. Okay.
Okay.
And
Now this is a long-term asset. This is a long-term asset. So can we make it this as a fixed asset or not? 10 lakhs rupees fixed deposit in the bank.
we cannot make it. It's not a
Okay.
fixed
So
asset.
okay. Wait. Soma. Except Soma, anyone can argue, is it a fixed asset or a current asset? Except Soma, anyone. Can you speak your arguments? Whether it is a fixed asset or current asset?
Because that is not depreciated, that is, so that reason it may be the current asset.
So you have opened the entire blockings. Okay. You came. Okay. What is the comment? Tell me.
Depreciation.
Yeah. Ambu.
No,
What
that
is your
asset, whatever asset is depreciating now, that asset will be called as fixed asset.
yes.
He is revealed now.
Yes. So actually in your studies, there will be a lot of explanations like we can liquidate, we cannot liquidate, we can use for running, or you can ask this is a long-term asset, this is a short-term asset. These all are yes supporting information only. The major change between the major difference between current asset and fixed asset is depreciation will be calculated for the fixed assets. For current assets, there will not be any depreciation. There will not be any depreciation. Okay, that is the major change between these two. So because in your studies, here it is, I'm not blaming anyone. In your studies, whenever you are going to college something, whenever you are learning, at that time, the lecturers are not worked in an organization. The lecturers are not worked in an organization. They will give examples a lot, but this is the major change between current asset versus fixed asset. So the difference between current asset and fixed asset is this one. Depreciation will be calculated for the fixed assets, and for the current assets, depreciation will not be calculated. Okay, the best example I will give you, the best example. Suppose 10 laptops I have purchased. 10 laptops I have purchased. Okay, then these all are why I am purchasing. I am selling these items to the customers. That is my business. I am purchasing and selling. 10 laptops I have purchased. Okay, in the month of April. In the month of April 22, I have purchased 10 laptops. Sold 6 laptops. And 2 laptops started using in finance department or in sales department. Sales and marketing team, they are using. 2 laptops is located in my warehouse, in the warehouse as inventory. Okay, so 6 laptops sold, it was gone, dispatched to the customers. Now in my company, 4 laptops are there. 2 laptops are using by sales department. 2 laptops are located in the warehouse. Then suppose I have purchased this laptop, each laptop 50,000, 50K. Each laptop purchased at the rate of 50K. then is there any changes? I mean to say, is there any impact on, I mean to say, is there any difference between these two? Yes.
Yes, obviously.
The
Yeah,
valuation is completely different. So for this to Samadhan, your voice is, there is a lot of noise, Samadhan. Okay, from Samadhan, I have muted everyone. I'm sorry, but there is a lot of noise. Okay, so 2 laptops are located in the warehouse. It will be the same 50,000 only. But whereas this one is, because you started using, depreciation will be calculated. Depreciation will be calculated. Depreciation will be calculated. Okay, depreciation will be calculated. So the value will be decreased. The value will be decreased. Is it clear? Any questions in this one?
I think.
Okay, fine. Let me proceed. Now, what are the methods of depreciations you learned? Except Soma, Venkatesh, and Ambu. Remaining
Diminishing,
people.
straight line, fixed,
Okay, I'm
sinking
telling
fund.
except Venkatesh,
Oh,
Soma,
sorry.
Ambu. Okay, remaining. What are the methods we learned? Depreciation methods. Anyone, please, except these 3 people. Soma, Venkatesh, and Ambu. Remaining people, at least I want to listen your voice. Yeah. Anyone, please. What are the methods of depreciations in your studies, in your education? Already he revealed. Can anyone speak? What are the depreciation methods? Okay, straight line. So no one is speaking. Oh, accept this. Okay, straight line method
Double
and
Diminishing.
decline balance method,
diminishing
decline
method.
balance method,
Sinking
sinking
So
fund.
fund method.
any else? What, diminishing method? Any other one?
Sinking fund.
Huh?
They will keep some sinking funds. They will keep certain amount as a fund to purchase new asset in the future once it is a lifespan
Okay.
is exhausted.
Sinking fund. What it means they will do, like that is you are not doing, like it is not a method. It is you are making some funds reserved. Am I right?
Yeah,
Yes, yes.
yeah.
Then that is not a method actually. That is another form. Give me a second.
Units of production is also one of the method. Satya.
That is not a depreciation method. It is one more method. I will show you. Give me a minute. Okay, fine. That is, those are different methods. So okay, what is that? Units of.
Units of production based on the number of units produced by a machine. That
Okay, so that
according.
is another. Okay, another method is there. Okay, fine. The wording is different. Fine. Okay, sinking method means, I don't think so. Sinking method is not a depreciation method. It is you are making some funds reserved. Am I right?
Yeah,
Agree?
sinking fund will be created. See, instead of
Yes.
creating the accumulated depreciation, what they will do is they will create a sinking fund in the equivalent amount of that, so that at the end of the lifetime of that particular asset, they will use this particular sinking fund in order to procure the new machine in place of
Then
the.
it is not a method. It is not a method. Okay, so that is 1 second. It is a little bit slower. Please bear with me. It is provision for reserve. That is called provision for reserve. Okay, fine. Now, actually the major methods are, it is diminishing is called, in the system it is called reducing balance. It is called reducing balance method. One is straight line method, another one is reducing balance method. So in your studies, it may be diminishing, but the actual in the system it is reducing balance. Now my question is once again, so at least you can like Soma and Venkatesh and Ambu don't speak. So I'm asking why these two methods are available. Why these two methods are available? What is the reason behind two methods, different methods? In India, we have two methods. In India, we have two methods, only two methods. What is the reason two methods are there? Any, yeah, now we can give, like I'm giving option to Ambus, Venkatesh.
Yeah.
Ambu.
Basically, if you look at the Indian accounting, from the legislation point of view, we have two governing bodies. One is corporate law, and another one is income tax law. If you look at the corporate law, there is a schedule for the fixed assets according to which there is a straight line method, or at the option of the organization, they can either go for the straight line method or reducing the balance method, as the case may be. But there are certain assets for which it has specifically given what type of depreciation method should be adopted. Basically, this straight line method will be applicable in the case of, will be adopted from the corporate law standpoint of view, company law standpoint of view. When it comes to the income tax law, they have all these the depreciation rates have been given in the respective schedules at the written down value method. That means the depreciation needs to be calculated based on the written down value method. This is where we will get this the concept of the deferred tax and the deferred liability, the deferred tax liability and deferred tax asset in the income tax, and there is a specific the accounting standard governing this area.
Okay, fine. So simplest way,
Straight
yeah,
line method is a fixed expense. Reducing balance is in percentages.
yeah, you're right. Fine. So the entire simplest way. So this entire discussion, whatever we have discussed, for freshers or new joinees which you don't know anything, simply you need to remember depreciation will be calculated for fixed assets, and depreciation will not be calculated. Depreciation will not be calculated for current assets. These 2 points you need to remember. Okay, whoever is new to this dynamics, new to accounting, so the simplest, the entire story, leave it. You need to remember, if anyone is arguing, first thing is depreciation will be calculated for fixed assets, and for current assets there is no depreciation. That's what you need to remember. Next, depreciation methods. In the system, there are so many methods. One is straight line, another one is reducing balance, So actually in India, not only India, in across the globe, majority countries, they will follow two acts, Companies Act as per government process. In India, we have two acts. One is Companies Act. Another one is Income Tax Act. These are two government processes, government functions. One is Companies Act, another one is Income Tax Act. Okay, Companies Act will look at, I mean to say, will look at the sales related. Okay, so Income Tax Act is against your salary, against your income, against your profit, income tax need to pay. Okay, so as per the Companies Act, we need to follow straight line. We need to follow straight line method. As per the Companies Act, we need to follow straight line. As per the Income Tax Act, we have option to use straight line or reducing balance. Either one you can use it. Government has given provision, you can use straight line or reducing balance. But 99% people will opt for reducing balance rather than straight line. Why? 99% companies, they will follow reducing balance as per the Income Tax Act rather than straight line. What is the reason behind? 99.99%. Let me finish. No problem. Okay, we'll discuss. Okay, so the reason behind, suppose you are getting income this year, if you are running your business, okay, now government is giving option to book a expenses in this year 10 lakhs, next year 10 lakhs, next in this year 20 lakhs, next year 10 lakhs, next year 5 lakhs. So you have option. One is like income tax, you need to pay to the government of authority. Then suppose there are three options to you. One is I need to pay 5 lakhs now, next year I need to pay 5 lakhs, next year I need to pay 5 lakhs. This is one option. Another option is I need to pay this year 2 lakhs, next year 6 lakhs, next year, let me show you. Suppose government is giving, you need to pay tax this year 5 lakhs, next year 5 lakhs, you need to pay definitely, next year 5 lakhs. This is one option. Now another option is 2 lakhs this year. The next one is suppose 6 lakhs. Next you need to pay 7 lakhs. So 7 plus this one. Okay, fine. So then usually, because I'm a genuine payer, I will pay 5 lakhs in the first year. Is it? Or you will pay first year 2 lakhs? The total is 15 lakhs only. Anyone will go for first option or second option?
I think second option.
Second option, because you have some amount, you can rotate, you can use it. Why I need to pay in advance like 5 lakhs in the first year? Okay, anyhow total 15 lakhs only, but I will choose second option. The reason behind, first I will pay only 2 lakhs in this year, next year I will pay 6 lakhs, next year I will pay 7 lakhs. Meaning this one means you are booking 20 lakhs expenditure here. This is expenses. First year you are booking 20 lakhs expenses. Example I'm telling you. Second year you are booking expenses 10 lakhs. third year you are booking 5 lakhs. This is expenses. Okay. Otherwise, give me a minute. This is 15 lakhs. This is 15 lakhs. So government has given provision like you can book expenses. You can book expenses. First year 10 lakhs. Next year 10 lakhs. Next year 10 lakhs. Okay. In this option, I will go with this one or this one. This is expenses booking in the system. I will try to book more expenses in the first year so that I can pay less income tax. Agree with me?
Yeah.
Yes.
Because in the first year, I am going to book more expenses, then I can showcase less profit. In the reducing balance calculation, you are going to book expenses like this. In the straight line, this is the method. Understood everyone? Any confusion? Okay. I'm muting Venkatesh. There is a lot of background noise from you. Okay. So whenever you are booking expenses in the reduce straight line method means like this: expenses booking 10 lakhs, 10 lakhs, 10 lakhs. And a straight line reducing balance means initially more expenses you are booking and later you are booking less expenses slowly. Okay. Fine. So now what is the method? So now understood now depreciation methods, why two methods are available. In India, we have two government processes, the government departments, okay, are government bodies. One is Income Tax Act, another one is Companies Act. One is Companies Act, another one is Income Tax Act. So that is the reason we need to maintain two methods. So if you want to maintain two methods equally, straight line method only, you can use it. System will give you provision. You can use straight line method only for both Companies Act and Income Tax Act. But usually 99% customers or clients, they will use straight line for Companies Act, and for Income Tax Act it is reducing balance only. Usually, even though straight line method is available, but no one is interested using straight line. Fine. Now you are telling like straight line, you are telling about income like reducing balance. So what is this methods? How it will be calculated? Let us understand. How it will be calculated? Let us understand. Suppose I have purchased a car. At the rate of 12 lakhs rupees. At the rate of 12 lakhs, I have purchased a car. Now, the life of the car is 5 years. The life of the car is 5 years. Okay. Before going to discuss this one, I want to tell you one thing. We are discussing about depreciation. Am I right? Depreciation. For only one item, once again, except Soma, Venkatesh, Ambu, and Ignesh also, excluding all these four. Like apart from this depreciation, there will be appreciation. what is the item appreciation will be there? Any idea? Except Soma, Venkatesh, Ambu and Ignesh. Remaining people at least. Remaining we have 5 members. I want to listen at least your sweet voice. Anything is available appreciation means the value will be increased. The value will be increased. It is not depreciated. Means it is not decreased, increased. Any item in the world?
Land.
Exactly. Yes. So the land will be depreciated. Sorry, appreciated. The land will be appreciated. Why? Because in the entire world, whatever the land is there, that land only, it cannot be created. Land cannot be created. It is fixed. I think maybe water is 73% or something, and land is some 27% or something. I don't know the exact calculations. So that land will not be increased. Means you cannot create land. That is the reason the land value will be increased always. The land value will be appreciated always. So along with the depreciation, there is appreciation only for land. If it is now in our system or in our process, if it is land comes, then it will be appreciated. Land will be appreciated. One more item is there, building. In this building, we have 2 components. One is land, another one is construction. Construction. So land value will be increased, appreciated. Construction value will be depreciated. Construction value will be depreciated and land will be increased. So these are the 2 things we need to understand. So I'm writing these points. So all these things you can leave it. Okay, whatever it is there, you need to remember from this one. So appreciation will be happened for land and building also, because building every year it will be depreciated. Every year it will be
Can we cannot hear you, Satya? Hello, can you hear me? Any of the team members?
Yeah, Soma, we
Yes,
are able
Soma.
to hear you, not the Satyas.
Yeah, last team.
am I audible now?
Yeah.
Yes,
Yes.
Satya, no, we are able to.
Fine. I'm sorry, there is a voice cutting. So I think is this whenever I'm giving discussion about this land, you are able to hear, am I right? Or it was disconnected at that time?
No. We had till there.
Okay, fine.
Lands can produce more.
Okay.
Yeah.
Fine. Now, if I purchase a car at the rate of 12 lakhs, at the rate of 12 lakhs, life of the car 5 years means after 5 years the car value is 0. Assume it is value is 0, but car value will not be 0. It will be at least scrap value something. But for time being, that is called salvage value. One is scrap value or salvage value. Assume like for this one, for time being, assume like 0. Okay, for time being. Okay, now the car value is 0. After 5 years, completion of 5 years, it is 0. Then each year, for each year, straight line method, If it is a straight line method, then every year depreciation will be calculated. Depreciation will be calculated 12 lakhs divided by 5. That means 2.40 lakhs will be depreciated. 2.4 lakhs value will be depreciated. Understood? Any questions in this one? Any confusion? Any questions? Everyone? Every year 2.4 lakhs will be depreciated. So that after 5 years 2.4, 2.4, 2.4 like that, like 5 years it will become 0. Okay, next. If it is this is straight line method. It is straight line method. If it is a straight line method like this. If it is a reducing balance. If it is reducing balance. So government will give you the percentage of the depreciation. It is around, if it is electronic items or this kind of motor vehicles, it will be around 60% something. But for easy calculation, I am taking 50%. Okay, fine. Just give me a minute. Fine. Now, if it is 50%, if it is 50% depreciation, then first year the value will be depreciated. The value will be depreciated the first year. After first year, this will become car value depreciation first year. It is equal to 12 lakhs into 50% means 6 lakhs. Agree? The depreciation you can book means you are putting more expenditure. You are putting more expenses in the first year. Whereas here, every year it is 2.4 lakhs only. But whereas here, the first year the depreciation is 6 lakhs. Next year,
It will be 3 lakhs.
second year, it will be 3 lakhs. Third year, it will be 1.5 lakhs. Fourth year, 75,000. Understood?
Yes.
So this is depreciation method for everyone. I'm asking about everyone, whoever is joining. So for everyone, like the depreciation will be calculated for straight line every year 2.4 lakhs only, it is fixed. Whereas here there is a change. That is the reason I told you I have example given for like suppose if you are booking more expense in the first year, you are going to pay less tax because you are going to show less income in the first year, and it is keep on next year it is you need to pay little bit more tax in the next years. Understood? Any questions here? That is the reason majority companies, the I mean to say company CEO or CFO or managing directors, what they will do, they will purchase car, they will use 2 years, after that they will sell, they will purchase another car so that they can book more depreciations.
At the same time, they can enjoy the new brands.
Yes, exactly. Because that is the reason the company directors management team, directors and CEO, CFO, CTO, they will purchase every 2 years, at least every 2 years, they will change a car. They'll change car because they will put expenses more, and they anyhow they are getting new branded cars or new models every year, every 2 years. Okay, this is the secret of so if it is under CEO or CFO or managing director's cars, you will get it is maintained, well maintained. Even it is a small problem also, they will spend money and they will make it. That is the reason if you have some any known company owners cars, you can purchase blindly. You can purchase blindly. There will be heavy competition always. And even if it is a normal, if it is our car, suppose I have purchased the same, after 2 years, the car value may be 6 lakhs or 3 lakhs or 4 lakhs or 5 lakhs. But that car managing directors are their cars, it may be sold at 8 lakhs something because it is well maintained. Okay, fine. That is different scenario. Is it clear to everyone? Everyone? Fine.
Yeah.
I think it is clear now. So in the system, I will show you on Monday, but writing down the first method. First one is depreciation profile. We need to create depreciation profiles. The first in the system, depreciation profile. Inside it is depreciation method is there. Depreciation methods will be there. It is not only two, there are so many methods. Straight line, reducing balance, like 200% reducing balance, factor. There are so many options are available. We'll discuss that one later. Next one is you need to create fixed asset groups, because group wise depreciation will be changed. If it is electronic item, depreciation percentage is different. If it is a motor vehicles, depreciation is different. If it is mobiles, depreciation different. If it is furniture, there is a depreciation different. If it is buildings, there will be a different depreciation. There are different depreciations. That methods are there. That is the reason you need to create fixed asset groups. Must and should you need to map in the fixed asset groups. Next one is third option, books. Okay, books means here one is Companies Act, one is Income Tax Act. For that we need to maintain books. In 2012 this is called value model. In AX 2012, the previous version, it is called value model, but in D365 it is called books. That is depreciation books. You need to maintain books. One is straight as per the straight line method, one is reducing balance method. You need to maintain books. Okay. In 2012 it is only 3 layers. Only 3 layers. But whereas in Dynamics 365 books, it is 7 layers are there. In 2012, it is 3 layers, value model 3 layers. In D365, it is books renamed, 7 layers are there. Total 10 layers, I'm sorry, 7 plus 3. This is 3 plus 7 layers now. Whatever it is there, old 3 layers that is available. Along with this one, 7 more layers are introduced in 2012, in D365, I'm sorry, in D365. Okay, what is available in 2012 layers means one is current layer, another one is tax layer, another one is operations layer. In 2012, we have current layer, tax layer, operations layer. In D365, it is available those 3, current layer, tax layer, operation layer. Along with this one, layer 1, layer 2, layer 3, layer 4, layer 5, layer 6, layer 7. There are 7 layers are available. Actually, in India, we are calculating 2 methods. We are calculating 2 methods. Whereas in USA, it is different 4 to 5 methods you need to calculate. You need to calculate 4 to 5 methods in USA. That is the reason it is available in different methods in USA. Okay, once it is done, then you need to map fixed asset group should be connected with books. Fixed asset groups should be mapped with books. Next, fixed asset posting profiles. Next one is parameters. Once it is created, then you can create a fixed asset master. So if you want to create a fixed asset master in a new company, you need to do all these setups. Then only you can create. You need to create fixed asset master. Otherwise, it will be mess up. These are the prerequisites to create a fixed asset. These are the prerequisites to create a fixed asset. Okay, fine. Any questions? Any more questions, team? Okay, if no questions, I'm stopping now. Okay, as I told you, there is a system problem, so I need to rectify that system problem. We'll connect once again on Monday. Remaining this,
Satya,
yeah.
last.
Yeah.
See, Satya, can we, when we are transferring the asset from one entity to another entity? No, I know this is too early to ask this question, but this came across somewhere. When we are transferring an asset, a fixed asset from one entity to another entity, how will it be done, Satya? I'm meaning to say, is it through the process?
In the system, it is not there. You need to sell independently. Here it is purchase, here it is sell, there it is purchase. That's it. There is no functionality in Dynamics. It is a product limitation in Dynamics. Okay. There is no transfer between one legal entity to another legal entity is not there. In the system, by default, it is not there. It is a like you need to sell this item for here in this company. You need to purchase in another company. That's it.
Is it through the intercompany process? Can we do it, or is it independent?
No, independently. We don't have that option at all.
Okay.
It's a product limitation in Dynamics. Is it available in SAP?
SAP, I don't remember, Satya. It has been very long time since I did it. I don't remember.
But it is, as per my knowledge, it is not there. It is product limitation. Yeah.
In the intercompany, Satya, can't we do one by creating this purchase order and sales order in both the respective entities?
That is SCM. As I told you, you are asking many questions related to SCM. So you can join our next batch. Then you will it will resolve a lot.
When is that scheduled, Satya, for the next T&L?
Whenever this batch is completed, finance and T&L, it is together. It is going on. Am I right?
Correct.
6 to 7 and 7 to 8. Once your
Oh.
batch is completed, yourself, you know, the batch is completed means new batch is starting for 6 to 7 and 7 to 8. It may be at least minimum 3 weeks. It depends. But I need to continue at least minimum 3 weeks. I cannot stop in between. So 3 weeks it is must. So mid of the July we can plan. Then you know yourself, like if it is completing this batch means you can join for T&L.
Okay.
Okay.
Right. Thank you.
Any more questions, team? Anyone?
Yeah, Satya, we need a one favor that do you have any document belongs to the two-step methodology? Any PDF document or any?
No, it's not like PDF document. It is two-step methodology itself is a Microsoft EXE. If you have partner source, you will get that one through Google it. If you Google it, you will get it. But I don't know. That is around 200 MB or something. Earlier, like long back, it is 100 MB EXE. It is now it is maybe 200 or not, because recently I'm not using much. So you can search Google or you can find something. Two step.
Okay. Do you have anything SEM? What you will cover the topics, that kind of a spreadsheet, the list of topics in the covered in the SEM module.
So if you ask me directly, like it is procurement and sourcing module, sales and marketing module, product information management, and then inventory management, and something master planning some extent. These are the 5 modules it will be covered, and along with that one intercompany, and a little bit I will teach production related, little bit I will teach about this one warehouse management as well, if you remember. So because if it is T&L means it will be covered like this one entire thing, and little bit manufacturing, little bit warehouse management and transportation management also I will discuss with you a little bit. And anyhow, finance it is already covered. So T&L people also joined along with you, am I right? For learning. So that is covered. Yeah.
Okay. Thank
Okay. Yeah, welcome.
Thank you. Thanks, Satya.
Yeah,
Bye.
welcome. You're welcome. Bye bye.